Hey everyone, welcome back. It's time for another deep dive, and today we're tackling some serious financial data.
All right, let's do it.
We're looking at LIC Housing Finance's third quarter results for the fiscal year 2024-25.
Sounds a little dry.
Maybe, but trust me, it's going to get interesting. We've got all sorts of stuff. Press releases, investor presentations, the whole shebang. And this isn't just any company. We're talking about India's largest housing finance company.
Wow, that's huge.
Yeah, they've been around for 35 years.
Yeah.
They got a network that stretches across India,
Impressive.
even have an office in Dubai.
Really? At Bauer.
So yeah, we're going to break down these reports,
Yeah.
figure out what's driving LIC Housing Finance's performance.
And what it all means for the future of housing.
Right, exactly. That's the big question.
Well, one thing that jumps out at me right away is that they're doing really well, despite a pretty tough economic climate.
Yeah, their profit after tax for Q3 FY25, it's up by a whopping 23%.
23%? That's incredible.
Especially compared to the same period last year.
It landed at a cool Rs 1431.96 crores.
That's a serious chunk of change. And their revenue, it also increased.
Not as much, though, right?
Yeah, it was more modest. Only a 4% increase.
Still growth, though, which is impressive given the global situation.
Absolutely. It reached Rs 7057 crores. So not too shabby.
No, not at all. But okay, so profits are up, but what does that actually mean for people trying to buy homes?
Right. What about their home loan portfolio?
Well, that's where things get really interesting. Their individual home loan portfolio grew by a solid 7%.
7%. That's healthy growth.
It hit over artists 254,652 crores.
That's a massive number.
It really shows their commitment to expanding homeownership, especially in affordable housing.
They've been recognized for that, right?
Yeah, they've actually received awards for their efforts in affordable housing, and they were even named the Best Organization for Women 2022 by the Economic Times.
That's a big deal.
But here's the twist. Even though their portfolio grew, the actual amount of money they dispersed for individual home loans, it actually dipped.
How much?
By 5% this quarter. It ended up at Rs 12,248 crores.
Wait a minute. That seems kind of counterintuitive, doesn't it?
It does.
Their portfolio's growing, but they're giving out less money for home loans.
Is that a bad sign?
It's not necessarily a red flag, but it definitely raises some questions.
Like what?
Well, could it mean that the housing market is cooling down a bit?
Maybe. Or perhaps LIC Housing Finance is shifting their focus.
You're thinking about those project loans.
Exactly. Their project loan disbursements, they absolutely exploded this quarter.
Exploded. How much are we talking?
An unbelievable 162% increase.
162%. Wow, that's insane. What's fueling that kind of growth?
It does seem like they're moving away from individual home buyers and putting more support behind large-scale projects.
Maybe they're responding to market conditions?
Could be. And this shift could have a big impact on infrastructure development.
How so?
Think about it. Construction jobs. The ripple effect on the economy?
It's a domino effect.
Exactly. It's a trend worth keeping a close eye on.
Okay, so we see this move towards project loans,
Yeah.
but we also got to look at the financial health of these decisions.
Sure.
Their net interest margin,
Yeah. For those of us who are financially inclined.
it actually decreased to 2.70% for this quarter.
That's interesting. Could this be a result of their strategic shift?
It's possible their cost of funds has stayed relatively stable.
But those project loans, they might be impacting their NIM.
Their lower yield, right.
Exactly. They could be prioritizing lower risk assets.
Even if it means sacrificing some short-term profit.
It's that classic balance between risk and reward.
It's a tough call,
Yeah.
but it seems like they're playing it safe in a volatile market.
I think that's a fair assessment.
But hold on, there are a couple more numbers that caught my eye. They made a technical write-off of Rs 174 crores during the quarter.
Oh, yeah. That's interesting.
Now, for our listeners who aren't finance gurus, can you explain what a write-off means?
Sure. It basically means that LIC Housing Finance is acknowledging that they probably won't recover a portion of those loans.
So it's like accepting a loss.
Pretty much. It doesn't mean the entire loan is gone,
Right.
but it does affect their profitability.
Okay, so it's kind of a financial housekeeping move.
You could say that.
And they're also cleaning up their balance sheet by selling off some stressed assets.
Yeah, those loans that are really struggling.
Using an asset reconstruction company, or
The good old ARC.
they got ours as 250 crores from this sale.
Not bad.
Can you explain what ARCs do and why LIC Housing Finance is using this strategy?
Sure, ARCs, They're like specialists in handling these troubled loans. They buy them from companies like LIC Housing Finance, so the company can recover some value.
And clean up their books.
Exactly.
Hmm.
It's a complex system, but it's an important part of the financial world. It allows for a kind of recycling of bad loans.
Interesting. So it seems like LIC Housing Finance is playing it safe, which makes sense in this economic climate.
I agree.
But at the same time, they're making these bold moves into project loans and expanding their reach.
It's a curious mix.
They're being cautious and ambitious at the same time. What do you make of that?
Well, it's a delicate dance, isn't it? They know there's economic uncertainty, so they're managing risk,
But they're not letting opportunities pass them by.
especially with those large-scale projects.
It'll be interesting to see how the strategy plays out in the long run.
Absolutely. It's a story we'll be following closely.
Okay, so we've got a good handle on their performance and this balancing act they've got going on.
Yeah.
But how are they actually funding all of this?
Well, their investor updates give us some pretty interesting clues about how they're operating.
Like what?
They're diversifying their funding sources.
Yeah.
You can see it when you look at the breakdown of their liabilities.
So they're not just relying on one source of funding.
No, their dependence on traditional bank loans has gone down quite a bit in recent years,
Smart move?
while their use of non-convertible debentures has been going up.
Okay, spreading the risk. Not putting all their eggs in one basket, so to speak.
Exactly. It's a move towards stability. But you'd think that diversifying like this would increase their overall borrowing costs.
Right. Yeah, that makes sense.
But surprisingly, even with this shift, their weighted average cost of funds has stayed pretty competitive. And remember, they've also been moving towards those lower yield, potentially safer loans.
So they're managing their borrowing costs pretty well, even in a tough economic environment.
It seems that way. Yeah, they're being financially savvy. But what about the returns they're generating on all this activity?
Right. The investor update also goes into some key performance indicators, like return on equity and return on assets.
Oh, yeah, those are important.
They're both up compared to last year.
Right.
That's right.
Both are showing some positive growth, which is a good sign for investors
It means they're using their capital and assets efficiently.
to generate profits.
Exactly.
Exactly. It's not just about growth, it's about profitable growth. And another thing to consider is their impressive geographic reach.
Yeah, I noticed they're operating in over 450 centers across India. It's a pretty widespread.
It is. They're not just focusing on big cities, which can be risky in a fluctuating market.
So they're in major metropolitan areas.
Yeah, and smaller towns, too. It's like they're casting a wide net to capture a diverse customer base.
Smart strategy. It gives them access to a much larger pool of potential borrowers.
And it reduces their dependence on any single market.
They're not putting all their eggs in one basket.
Nope. And they're not stopping there either. They're actively expanding their workforce,
Oh, really?
which suggests they've got even more ambitious growth plans in the pipeline.
Ambitious.
Huh.
But are they being reckless? They've got this interesting mix of customer types now, too.
How so?
It's not just salaried employees anymore. They're lending to self-employed individuals and even corporations.
I see. You're right. That's another smart move. It's all part of their risk diversification strategy.
So they're tapping into new market segments?
Yep. And spreading their risk. It's a more balanced approach. That could pay off big time in the long run.
Fingers crossed. But they're not just relying on traditional bank branches to reach these new customers.
Right. Nope. Their distribution network has evolved. It now includes direct sales agents, customer relationship associates, and even a direct marketing channel.
So they're embracing a more modern, multi-pronged approach to customer engagement.
That's one way to put it. But with all these different channels and customer types, how do they make sure they're lending responsibly?
Yeah. How do they know they're not taking on too much risk?
Well, they're keeping a close eye on key metrics.
Like what?
Things like the installment to net income ratio, or INI.
INI.
Yeah, and the loan to value ratio, or LTV.
Okay. Now you're just speaking another language. Can you translate that for us regular folks?
Haha, sure. The INI, it basically measures how much of a borrower's income goes towards loan repayments.
Got it.
A lower INI is generally better because it means the borrower is less likely to default on their loan.
Makes sense.
And LIC Housing Finance's INI for recently approved loans has been around 31%.
Which is good.
Yeah, it's a healthy sign. What about the LTV? You want to know about that one?
Sure. Break it down for me.
The LTV, it tells you how much of a property's value is being financed by the loan. So a lower LTV means less risk for the lender.
Okay. I'm following you.
Their LTV for recent loans has been between 47–52%.
So again, they're being cautious, sticking to prudent lending practices.
It seems so.
Yeah.
They're not just throwing money around, they're being strategic and data-driven. But there's another factor lenders have to think about, right?
What's that?
Prepayments.
Prepayments?
Yeah. What happens if borrowers pay off their loans early?
Oh, right.
Yeah.
That could mess up their projected income.
Exactly. It can disrupt their projected interest income. LIC housing finance's prepayment rate has been fluctuating around 9–10%.
So, not too bad.
It's something they're definitely keeping an eye on. It's like they're juggling all these different factors: growth, risk management, funding costs, prepayments.
It's a complex financial puzzle.
It really is. But let's zoom out for a second. How does all of this fit into the bigger picture? You know, the broader trends shaping the housing market.
You mean in India and globally?
Exactly. Interest rates are a major driver, and we're seeing central banks around the world starting to raise rates.
So interest rates are going up.
Which could have a direct impact on mortgage rates in India.
Okay, so if interest rates are going up, what does that mean for like me or anyone listening who's thinking about buying a home? Should we be hitting the pause button, or is it still a good time to buy?
That is the million-dollar question.
Oh.
And unfortunately, there's no easy answer, you know. Everyone's situation is different.
True.
But LIC Housing Finance's performance and these broader market trends we've been talking about, they definitely have implications for them.
So what's the key takeaway here?
Knowledge is power. If you're thinking about buying a home, you need to be aware of how rising interest rates could affect you.
So do your research.
Exactly. Shop around, compare rates from different lenders.
Make sure you can afford those monthly payments.
Especially if rates keep climbing.
Solid advice. Don't just jump in blindly. Do your homework first. What about investing in the housing market? Is now a good time to buy property, or should we wait?
Well, investing in real estate can be a great way to build wealth.
Long term.
Yeah. But it's important to remember that it's a cyclical market.
What does that mean?
It means prices go up and down.
Yeah.
You know, it's not a straight line.
So don't put all your eggs in one basket.
Exactly. Diversify your investments and be prepared for the long haul.
This isn't a get-rich-quick scheme.
No, it's a long-term game.
So be patient. Be strategic.
And don't freak out if the market dips.
It sounds like we need to stay informed and make smart decisions, whether we're buying home for ourselves or investing.
Absolutely. That's what we've tried to help you with today, you know, with this deep dive.
We've given you the data, the insights, different perspectives to consider.
Now it's up to you to take this knowledge and apply it to your own situation.
You've got the tools now. Time to build something great. But LIC Housing Finance isn't the only player in this game, right?
Oh, no. They've got competition.
Some pretty stiff competition.
To really understand LIC's position, we need to look at the competitive landscape.
Okay, so who are the big players?
Well, one of the biggest names in Indian housing finance is HDFC,
HDFC.
the Housing Development Finance Corporation.
Okay, I've heard of them.
They're a well-established player, huge network, rock-solid reputation.
So how does LIC stack up against a giant like HDFC?
It's not really a David and Goliath situation.
Half a so.
Well, LIC has some serious advantages.
Like what?
They've got the backing of the Life Insurance Corporation of India.
That's huge.
It gives them access to a ton of capital and a massive customer base.
That's a powerful ally to have. But HDFC's been around for a long time. They must have some advantages too.
Well, they do. But LIC has been incredibly successful in tapping into the affordable housing segment.
Which is a huge market in India.
It is. They're not just competing on price. They're strategically targeting a specific customer base.
With a real need.
Exactly. It's a smart move. But how do they keep up with the innovation that a company like HDFC is probably investing tons of money in?
Right, because HDFC, they're not just sitting around.
You're right. They're not. LIC is also investing in technology, streamlining processes, making the customer experience smoother and more user-friendly.
It's a race to adapt.
In a rapidly changing market.
It sounds like a real battle of the titans. But it's not just a two-horse race, is it?
No, there are other players too.
Like who?
You've got Indiabulls Housing Finance,
Okay.
PNB Housing Finance, Duan Housing Finance, and others.
So it's a crowded field.
It is. And each player has their own strengths and weaknesses.
Their own target markets and strategies.
Exactly.
So LIC needs to be on their toes to stay ahead of the pack.
They can't afford to get complacent.
No room for error in this dynamic market.
They've got to keep innovating, adapting to changing customer demands, and managing risk effectively to maintain their leading position.
Well, we've covered a lot of ground today.
We have. We've looked at LIC Housing Finance's financials, their strategies,
The competitive landscape,
and the broader trends shaping the housing market.
but there's always more to learn.
That's the great thing about a deep dive,
It sparks curiosity.
and encourages you to explore further.
We encourage you to check out the source materials. We've linked them in the show notes, and draw your own conclusions about LIC Housing Finance's future prospects.
Think of this as a starting point for your own deep dive.
But before we wrap up, I want to touch on something we haven't explicitly addressed. We've talked a lot about numbers and ratios and financial strategies.
The nuts and bolts.
But behind all of this, there's a human element.
That's an important point. It's easy to forget that behind every loan, every investment, there's a person or a family with dreams and aspirations.
Exactly. Whether it's a first-time homebuyer, a family looking for more space, or a developer building affordable housing, these transactions have a real impact on people's lives.
And LIC's commitment to affordable housing and social responsibility.
Yeah.
It adds another layer to their story.
It shows they're not just focused on profits.
They're also trying to make a positive impact.
So it's not just about the bottom line.
It's about the bigger picture.
And as we conclude this deep dive, I want to leave you with one final thought. We've talked about how LIC is navigating the current market. What about the future?
What about it?
How is technology going to disrupt the housing finance landscape?
That is a fantastic question. We're seeing the rise of fintech companies, online lending platforms.
New ways of assessing creditworthiness.
How will these trends impact traditional players like LIC?
What opportunities and challenges will they create for borrowers and investors?
It's something to think about as we move forward.
That's a great note to end on. The future of housing finance is being written right now, and it's going to be an exciting journey. Thanks for joining us on this deep dive into the world of LIC housing finance. Until next time, keep exploring, keep learning, and keep diving deep.